Good morning, gentlemen. My brother has helped me procure a new headset with a better microphone and better everything, so let's see how this goes. I recorded a short video that I didn't share just to check the sound and volume, and it seemed to work pretty good, so let's see how that goes. This is a update video. I did one before, but the sound was awful. I don't know how to delete the live stream once it's uploaded, so I'm not exactly sure uh, how to do that. The guide says, go to the three dots and click delete forever, and it doesn't show up, so I don't know. Anyway, this is an update on a couple things. The first one, of course, is our beloved HYDTF, which finally has done a nice little breakout. Of course, it's a lot of other things have done a little breakout recently, but this one is very well deserved. It never should have been down here. It should have at least stayed up in this area, but we're back there again. If anyone, which I don't think anyone did, followed my advice and purchased on this day or during the dips, you are up, well, 170. I'm going to say, what is that? 50%? 60? I'm not sure exactly how much, but it's a nice bump. HYDTF will be reporting on the 1st of May. That's about 2 weeks out, and I'm very excited for that. They did have a little town hall meeting for their company a couple days ago or a week ago. I watched that video. Everything is on track with the company. Very positive outlook still. And yeah, I did my last purchases down here, and then I said, all right, I'm done. This is way too much of my portfolio, and I'm probably going to hold. I'm going to guess till at least $6 to $8, most likely 8. And at 8, I'll sell a small position of the company, and that may cover the entire cost of the goal is to basically get all the initial principal back. So I mean, and this may take some time. I mean, I don't want to try to time the market and do that with these guys unless I'm buying at the lows, which has worked out pretty well. Not all the lows. I think I bought down here, and I think I bought over here, but and it worked for a while. But my average cost is definitely on the low side. So if it dips below the twos, I'll buy. But besides for that, I'll be done for a while. Anyway, HYDTF is doing well. Nice breakout. I promise I'm not just a penny stock guy. Most of my portfolio, 90%, is in actual good things. I was actually able to finally get. I was in Oracle around $200, maybe 170. That was the amount, and I was able to sell. I think I sold. I think I sold right around like in the 250s area. And then I just waited for a bit. And then when I saw the earnings were coming up and I was big on the AI catalysts, I bought in again down here. I did not sell at the top. I think I sold more like right around here. And yeah, it was one of these little low points right here. So it was a nice little bump, 40-point gain. $40 gain for whatever stock I bought. But long story short, from this point right here to this point right here, nothing has changed. If anything, they've just gotten more work and more potential. So right around this date, I think, yeah, the low is 134. I got in at 138, 138.70. I bought 100 shares. I bought 100 shares because I like to be able to sell calls and options. And eventually, if this thing does get back up to the 200 or to 250, 300 area, then at that point I would probably do like start selling calls. Because the amount of money you get from selling calls not only depends on volatility and time, but also depends on the size of the company, on the stock price. So a volatile company at 100 would make a lot less money for premiums than a volatile company at 300 or 400. So Oracle, if it has a nice little meteoric rise over the next few months and gets up to 300 again, that'd be a point where I'd probably look at the metrics and the financials and be like, all right, I can't predict everything. We can't predict what the market will do as far as things going up or down or by how much. But around the 300, I might sell like 3 month to 6 month, either deep out of the money calls just to get like premiums on it and maintain the stock, or if things are looking like there's going to be a downturn again, if things are going to be a big pullback, I might sell deep in the money calls like at 250 for a 6 months out, and then hope that it tanks. It's almost like a put, but you're uh, you're just hoping the stock goes down, but then you get to keep your stock. And it's not a put. You're just selling deep in the money calls, and then if it goes down to 200, well, you keep the premium. So anyway, bought some Oracle. I bought some Hood. I did not buy Hood at 63, nor at the 67 or the 70. I believe I bought it at about like 75. I should have bought it down here, but again, it's really hard to time this stuff. You're like right here, you're just like, boom, oh, that would be a great time to buy Hood. Oh, maybe that's a good time to buy Hood. Or right here, oh, that's a great time to buy Hood. Uh, it's just hard to know. And even on the upswing where you're just like, oh, the moving averages are working. Let me just see. Even up here where like just like, oh, that's well, I guess the trend lines weren't looking good there either. But this right here, I don't know why, but this is the day right here. This is the day I bought. So yeah, I thought that's where this was just about to cross. This had just crossed, and I was like, all right, the market's turned around. Iran war might be ending. It's above the moving averages. Things are in an upswing as far as all that. I bought 100 shares of Hood. I was in Hood for a while. I sold around 120, and I was just like, you know what? Let's uh, let's get out of this for a while and allocate some money into options or other things. But so Hood, again, this may change in time, but I promise I'm not just a penny stock chaser. I do have I did add something. Well, I have bag spec, which of course is bag speculation, but I do like to look for a small percentage of my portfolio, like 5 to 10%. I like to look for things like Hydrite, which I have added to the, um, I call it the Dunda Market Index because it's like I wanted to make my own index fund of things I thought were like a broad market index fund of things that I really like. I don't own all of these, but I've owned them all, most of them at one point or another. Birdiv is one I was waiting for a nice pullback on, and it really hasn't had one. Um, it's just GEV. I was in this one for a while. I sold it and made a little bit of profit, but man, I should have just sat in this for forever. The price to earnings right now is like at 80 or 90 forward, and I don't know. It's just I just can't bring myself to buy it. I can't bring myself to buy this or Costco or I mean, they're just too overvalued. I'm sure they'll grow into the valuation in 5 years, but in the meantime, there's other things I feel safer on. So anyway, uh, pardon me a moment. I'll have to move my. I don't want to move my microphone. Just cover your ears for a second. I have to blow my nose. Oh, I'm so sorry. Everybody's sick. So, but what I want to do is, first of all, again, do an update on Hydrite. They did do a town hall meeting. Did they? Where is it? Hydrite. Is this it?
Good afternoon, everyone.
So I would type in this thing if you want. I was considering watching this video and doing analysis with people. Hydrite is doing very, very good things, and I guess it was 2 weeks ago. They're doing very good things, And I would encourage everyone to watch this video if you are interested in it. I'm subscribed to their company, just Hydrite Technologies, Hydrite Technologies Incorporated Investor Webinar, April 2nd, 2026. Very good video. And yeah, that's a good video. What else are we looking at? So after going over Hydrite and basically trying to say I'm not just a penny stock moron, one thing I did do is I bought 20 options of Webull around, I think that I bought it right around here, but the options are for $5 expiring in January of 2027 on the 17th. So those options cost about $1.20. So 20 options times $1.20, about 2,400 bucks. At the price right now, I think it's up close to 100%. My goal is I definitely I don't think Webull is going to grow anywhere near Hood or SoFi or these other great companies that everyone's always talking about. But they are growing. They've got great technology. They're a great trading platform for people. So they got their niche. Again, they could crash. Something could fall apart. I think they're a Chinese company. That's another problem that people have with them. But I am looking at them at least getting between eight to $9 within before the end of the year, hopefully, ideally by the summer. And then if we can get up to that point, I can sell half the positions at a 300 to 400% profit, and then just ride out the rest of it till the end of the year, just in case it actually keeps going up. And if it does keep going up, then maybe I'll just let those options get filled and own the stock. I don't know though, we'll see. I like to generally sell options because you lose money in the end depending on the cost of the options. Like it would have just been better to buy it at $4.50, but I'll be buying it at $5 plus the $1.20 premium, which would be $6.20. That's like a 50% difference between that almost. So it would have been much better to just buy the stock instead of let it expire. But if Webull, something great happens and they go up to $20, I'm just like, all right, my cost basis will be about 6. It's at 20. All right, I'll just let it go. But that was one fun thing that happened. But I did want to go over a couple things that I did buy, but of very small positions. The first one is Healwell. These guys basically do predictive AI for medical patients. So they catalog a bunch of medical data and they use analysis to do predictive, predictions on potential health problems that people might have. So look at these statistics and just analyze everything. Be like, this person is most likely a high risk for this. We're going to do a preventative medicine, which I'm a big fan of. I think that if we did more preventative medicine, there'd be less, serious cases of things. It's almost like, somebody's drinking a lot and they're like, all right, our statistics and database show that this person is going to kill someone in their car or kill themselves and their family or kill themselves with alcohol or, whatever. There's all these risks. So our preventative medicine is going to be put them in rehab. I'm not saying this is how this works. I'm just saying that identifying problems before they become problems and then addressing them and solving them seems like a good business to me. At least it's good for the population. I don't know if it makes a lot of money. But their revenue jumped 400% from last year, or in 2025. They're on track, along with Hydrite, to be at $150 million in revenue in the next in this year. So they are a $190 million market cap. So this is the kind of thing I look for in a lot of the penny stocks is A, do they have rapid revenue growth? Because a lot of penny stocks are just stagnant. And I get it, you don't want to miss the boat, but most of them are garbage. This one, I don't know yet, but they just turned EBITDA positive. They have a good business model. They have partnerships with Orion, which allows them to have access to and sell services across, I think, 11 countries. It's either 11 or 20 countries. Very established in Canada. They have locked in revenue. And again, unless something terrible happens, they're just going to be growing, growing, growing. They are at 66 cents. I was fortunate enough to get in at 60 cents. I didn't know about them down here. If I'd been following them earlier, um, then I definitely would have been able to get in earlier because that would have been a good dip for me. But looking at this consolidation here, I'm comfortable holding these guys for a couple years. I only have a small position, a couple thousand shares at 60 cents, so um, that's not going to make or break me. My Oracle position is going to be bigger than this and all the other companies I purchased combined. So this is just pure speculative. These guys go up to, $3, $2. We're looking at, oh man, what's 3,000 shares divided by 3,000 or three? So that's 9 grand. So spending about 1,800 to get 9 grand, so be it. If they go back down to 50 cents, 40 cents in a year or two, and their business starts to collapse, you know what? I lose 50%. I lose $900, and that's not a bad risk reward for me. Um, I have a short track record with the penny stock stuff, but I'm looking at moonshots here. Amazon's going to be fine. Google's going to be fine. I don't own Dell. I did own I did own Micron, and I sold it at the wrong time, but you got applied, or I'm just saying I've got good companies, and we're just going to let those grow and whatnot. But I'm looking for. I don't know if Google is going to go up to $1,000 in 2 years. I mean, maybe they do, but um, I let's just say I'm looking for diamonds in the rough that can do some decent things. I will give you an update on Synergy. I did buy it at this dip right around here. I think I bought it like 85 cents, and it dipped, and I think I sold it at 60 or 55. I didn't buy a lot. I think in one account about 1,000 shares, and another account about another 1,000. So a pretty small position, and I did cut my losses. It may recover. The beverage rollout hasn't happened yet, but as I look at it, I'm like, these people are saddled with so much debt. If the beverage thing doesn't work out, or even if it doesn't, they're a $6 million company. They need to be making 30 million to get out of debt with their beverage rollout, and maybe they will. But when I compare that to something like Hydrite or Healwell or some of the other stocks we're going to look at, it's hard to be in things that aren't related to tech as far as growth, unless you're in Dutch Brothers or Cheesecake Factory. But so that was a small loss on that, but let's do a few quick things. I've been following Saidu for a while, Data Vault, Orbs, SLNH, TSSI, SATL is a new company. Some of these are new companies, but long story short, well, let's just go over. I'll just go to the Gemini summary of some of these things. I'll do a little quick overview here. But TSSI does rack integration for AI data centers. Their market cap is pretty small, and they have a beautiful future because they're the end process for most data center construction. Maybe not all of them, but for some of them for sure. They're $400 million. Their revenue is 250 million. Their net income is 15 million, so very low. But they're I was following these guys for a long time. I should have bought them right around here. Of course, I wasn't. Big downturn, choppy, choppy, choppy. Big downturn, choppy, choppy, choppy. It was a rough couple of months there, and then they went up, and I was like, oh, I'll wait for them to go back down. They went back down. I just wasn't paying attention. But I bought 100 shares of these guys. I would have liked to have bought 1,000 down here, but This is just kind of a buy and hold and wait and see. If they dip, I buy more. If they go up, I just wait. And if they go up a lot, then I'll just eventually sell it. But that's what these guys do. I'm so sorry, my nose is all stuffy. And now that the mic works, you guys could probably hear it. So bought a few thousand shares of Healwell, but 100 shares of TSSI. Next cock is SLNH. I've been following these guys for a while. I was able to get a decent price for them. Obviously, this would have been the best price, but you also, you would want to sell up there and whatnot. But I was able to get them at, I think my cost is, I think I bought them right around here because my cost is like 85. So they definitely dipped a little bit, and I probably should have bought more here, but they're finally in the positive. These guys are a combination of things. They're like a lot of other companies, they were a Bitcoin miner turned data center. And they actually have a lot of catalysts and funding to build out their data centers. So they're actually going to complete their project and get their data center stuff out. They have a lot of cheap power. I don't know if that's a lot compared to Iran or Mara, but they got a lot of power and it's very cheap and they are funded and they got some debt, but we're not super worried about them. So that's a little position I have. That's a couple thousand shares. I did buy a little bit of Orbs. Orbs is a WorldCoin treasury, but they also own Ethereum and have stakes in a couple other companies and cryptocurrencies. I believe that the book value of them, if they were to go into bankruptcy and have to liquidate today, fuck, I can't talk because I can't breathe through my nose. If they were to be liquidated today, I think their book value is like $2. It's somewhere between $1.70 and $2.50. I don't know the exact amount, but long story short is they are I think as the crypto market recovers and the economy in general recovers and the stock market recovers, they're a decent play. No bankruptcy concerns, no debt concerns. We're just waiting for things to recover. I'm not thinking this is going to go back up to $80 anytime soon, and I'm not expecting to go up to $10 anytime soon, or even $5. But at $1, these guys should. I got them around $1. So the market's in an uptrend. We're looking for a 2x to a 3x on this. If it gets up to a 2x, I may just reassess and be like, all right, should we wait for the 3x? If it gets up to the 3x, sell half the position. You made 50% profit, and then just ride out the rest and see what happens. Yeah, that should be good. Data Vault, a couple thousand shares of these guys. It's very rare to find companies that are in the penny stocks that are projecting revenue that is about where their market cap is. These guys are in a similar boat. Well, where their where their revenue is going to be. Their revenue right now is pretty low, but they are projecting in a year to two to have 1 to 1.5 billion in revenue. Their market cap is $470 million right now. Their revenue has been growing like crazy. What these guys basically do is instead of being a massive data center for like Amazon or Azure with Microsoft, they provide very small data center. We're talking like closet-sized data center things in multiple cities to provide processing power to smaller companies. And that's, I think, a niche that needs to be filled. So that's what they're working on. They've got some metrics we can go over at some point, but that's their general business. The next one is Saidu. I was actually in these guys at $1. And I was like, oh my God. That was a nice bump. And then they started to go down. I was like, oh dear, what's going to happen? And then I didn't sell, and then they went down more. And I think I sold like around $2. And I was waiting for it to go back down to $1, and it never did. It just stayed. And then it popped again. So I had a fair amount of shares in these guys, and I should have sat in them because they have a great business. They are the bad thing about Saidu is they are burning cash. They're not making money. So they're doing massive share dilution, lots of debt, and that's the problem. The good thing that they're doing though is that may become irrelevant soon because they're working on data centers in space with Lone Star. They have their own Lizzie satellite, so they make components for satellites and the space trade. They When they go up, they want to go up. They're a very small company, I believe. A satellite company that's $360 million. Yeah, they're burning money, uh, losing income, only 3 million in revenue. So their revenue is 1%, less than 1% of their market cap right now, which is one of the reasons why I didn't stay in them. Uh, these guys have the potential to go way higher than Hydrite, way higher than a lot of other things, but they also do not have good metrics right now, and they're definitely a bigger risk. So Hydrite and Heal Well, those are stocks where it's just like they're not as sexy. They're in healthcare. They're smaller. They're not going to get the attention that this will with the whole SpaceX IPO, but they're also safer, and they could be 3, 4, 5 baggers in the next couple years. So I do, man. It's kind of like a Rocket Lab situation. I'm not saying they're Rocket Lab, by the way. I'm not saying they're the same thing. I'm saying that Rocket Lab used to be really small, and now they're really big. These guys could have a similar thing with their price action. If they make partnerships with anyone, SpaceX, Rocket Lab, ASTS, not that they would do that with ASTS, their businesses are different, but they, they have a lot of opportunities to make money with a lot of different companies. And yeah, the minute they become profitable or stable, they're gonna get uplisted to a lot of stuff. So I only have 100 shares of them. It doesn't matter what the price is. I think it's in the fives because I got it in the last few days. But I got 100 shares because I just don't want to ape in right now. If they explode and go up to $50 at some point, great. 100 times 50, yeah, it's $5,000. That's a nice little 10x. Yeah, it'd be nice if I had more, but I just can't. I just can't ape in after these run-ups. I've learned my lesson too many times how dangerous that is. I've also learned my lesson that, you know, if I just buy and hold it on something that I think is going to do well, it eventually will. But anyway, um, what's the next one? Sat L. I don't know all the details on them. I know that Saidu does like their Lizzie satellite and has a lot of partnerships. These guys are a relatively new company. I did brief research on them, and I bought 100 shares of them mainly as an incentive for me to research more and watch them. But they are a $1 billion company, so they're 3 times as big as Saidu and a couple of these other people. Let's do the the metrics on these guys. So Heal Well, in 2025, they had a 427 year-over-year revenue growth. Very good. They're targeting 150 million in 2026, and that is similar to Hydrite, which is good. The only problem is that their market cap's a little bit higher. Hydrite was in the 100 million for a while, 90 million for a while. These guys, I think, were closer to what are they? I think it was 400. Oh no, 189. Okay, so these guys are very similar to Hydrite in terms of valuation and Oh no. I don't know when my sound died. Oh well, may have to make another video. All right.